Look, the guy's a showman, okay? He's a showman.
Yes, he has always been. There were any number of his reports I can remember that have very exciting titles.
Yes.
Yes.
I mean, honestly. I mean, do you think the Giants are that bad? I mean, this is like a one-hit thing.
Wait, what's the one-hit thing, though, Jim? I mean...
He was against the stock from the beginning. He's been fighting this stock. So suddenly, no. He doesn't have to fight anymore. You know why? Because he's been fighting it as a car company. Oh, but as a tech company.
As we were relishing the 10% jump in Tesla share price on Monday, September 11, 2023, CNBC and especially Jim Cramer were livid and accusatory almost to an unprofessional level. In the opening clip, courtesy of the Jeff Lutz from X, Cramer goes off on Adam Jonas' Tesla upgrade and price target adjustment. The question is why, and is he right? In that clip and the others to follow, Jim Cramer makes some interesting claims, and I think it wouldn't hurt for Adam Jonas' reputation's sake to find out who is right. Is Cramer right that Adam is a flip-flopping, corruption-enabling Wall Street analyst? Or is Cramer operating with an ulterior motive? The first claim I'll address rather quickly are the opening remarks that Adam Jonas creates sensational headlines. I don't think we really need to debunk or prove that. Some of those headlines are great and funny, the latest being from the September 11th note, which was called Unlocking Tesla's AI Mojo, Enter the Dojo. I don't think any media personality has the right to call out a clickbaity headline, but we also have to remember these research pieces are not for public consumption, and instead is meant for a private audience who understands and appreciates that analyst's perspective. Let's tackle what Jim Cramer said about Adam Jonas fighting against Tesla's stock. I'm not sure exactly what he means, nor does his co-host, but let's assume Cramer is saying Adam Jonas has perhaps thought less than of Tesla. Maybe that the potential that Tesla fans see aren't very realistic. Or Cramer means that Adam was never bullish on Tesla in the first place. I think we should take a look at some notable reports that Jonas and his team have put out over the recent years and determine for ourselves if he's a Tesla bear, a Tesla bull, or just an analyst trying to serve his customers as best as he can with the knowledge available to him. And hopefully we can dispel any myth that Jonas's call was, as Cramer put it, a one-time thing. I think it would be good to start many years back to establish Adam as a longtime analyst of Tesla, and not some bandwagoner. Well over a decade ago, April 5th, 2011 to be exact, Adam came out with a price target of $70 for Tesla stock, saying, "Our view on Tesla is based on a long-term transformation of the company being a more volume player, selling hundreds of thousands of units." He went on to say that Tesla investors shouldn't judge the stock on its current offering. So, fast forward to today, Adam wouldn't be surprised that Tesla is selling millions of units a year. To say that Adam Jonas was fighting the stock forever, to say that his bullishness was a one-time thing, that seems wrong. And to say Adam missed the whole run-up of Tesla when it was just considered a car company seems a little off base.
Wait, what's the one-hit thing, though, Jim? I mean...
He was against the stock from the beginning. He's been fighting this stock. So suddenly, no. He doesn't have to fight anymore. You know why? Because he's been fighting it as a car company. Oh, but as a tech company. You know what? Jensen Huang is sitting there saying, you know what? This guy is taking my chips because he doesn't have enough of his chips. He's creating brains, and now...
The end of this clip is a weird take about a company just wanting to buy semiconductors. Dojo in its first form has been in the works for years. First mentioned in 2019 during an Investor Day presentation. It took some time for Tesla to work out the kinks, with Elon stating on Twitter on August 19, 2020, that the power and cooling problem is hard. By July 2023, Dojo is finally in production, which means it was doing meaningful work, processing the video clips sent to Tesla from their fleet of cars to train their AI. Before Dojo existed, Tesla had a couple of GPU clusters already created and working. They consisted of NVIDIA's A100 chips, and they had thousands of them. So this means Tesla has been working with NVIDIA for years and not trying to be a competitor in the fabless semiconductor space. In actuality, Tesla's moves have been quite prescient when it comes to chips. From being more isolated from the semiconductor shortage 2 years ago, to having an alternative for AI chips during this huge demand of NVIDIA's advanced H100s. Tesla's decisions when it comes to semiconductors have been instrumental to their success. Without Dojo and NVIDIA, who knows how far behind the neural net version of full self-driving would have been. By the way, I don't have insight on Jim Cramer's unhinged comment about Elon Musk creating brains, but it's a possible reference to Neuralink or an AI brain for Optimus, perhaps? Let's get back to Adam Jonas's record. We started way back in 2011, but we'll fast forward to August 17th, 2017, and pick up the story from there. Jonas raised his price target that day from $305 to $317, with a bull case of $526 if everything was to go better than planned. This is around when the handover or delivery event took place for the first Model 3s, and he calculated a quicker ramp for that new model, but lowered the average price per vehicle. Regardless, it doesn't seem like Adam Jonas is fighting the stock here, nor is he missing out on the Tesla's rise as strictly a car manufacturer, despite Jim Cramer's claim. Unfortunately, Adam's bullishness on the Model 3 ramp was a tad bit early, and on March 28, 2018, Tesla shares were in a freefall following the ramping problems, along with a fatal Tesla crash. Jonas states that, "We think we're looking at one of the buying opportunities many investors have been waiting for. We'd use further weakness from here as an opportunity to build an equal weight position back in the stock." As you might gather, his analysis seems rather tame. He's not trying to defend his rating with overexuberance, and just notes his equal weight of the stock in light of the difficulty in the company's performance. Moving on to the following year, on May 21st, 2019, Adam Jonas lowered his worst-case scenario to $10 a share, citing issues with demand. He went on to say, "Tesla has grown too big relative to near-term demand, putting strain on great fundamentals." The bear case is not a price target, as his real price target was $230 a share. The note might have contributed to further softness in the stock, though, as it was selling off already due to those delivery issues. But my take on this is that he has a measured approach to Tesla. I fail to see what Jim Cramer or David Faber speaks to when it comes to Adam being against the stock, missing out on his successes, or chasing prices. After this call from Jonas, it would mark a local bottom in the share price, though. Later that same year, on December 19th, Adam put out a note with an increase in his price target to $250 from $230, though he did not increase the aforementioned bear case of $10 a share. He added that he was not bullish on Tesla longer term, his bearish stemming from the exposure to China and the debt load Tesla was taking on. Adam has been pretty consistent with his calls this year, but he did not anticipate what was to come, because at this point, Tesla started its massive rise in share price. Next, we head into 2020, and on February 4th, Adam was quoted saying, "Let me just step back and say, if Thomas Edison and Henry Ford made a baby, that baby would be Elon Musk. He's absolutely incredible. What he's done, using his enthusiasm to really change the world." But he had Tesla's stock as underperformed since the month before, with a $360 price target, maintaining his view that Tesla was overvalued. His downgrade was a tad bit early, but from the date of his quote to the low in the stock price 43 days later, Tesla shares fell over 60%. At this point in time, Adam had a view that Tesla would only produce 4 million cars a year in 2030, with a margin of 15%. Knowing that in 2023 we are on track for almost 1.8 million cars, we can say that call might have been a tad conservative. I do want to say that during this interview with CNBC, it might have marked the transition from Tesla being considered a car company to being analyzed as a tech company. Adam went on to say, from both the buy side and sell side, they are passing the stock over to tech analysts. From a tech perspective, they aren't just thinking about the number of units sold times a price or a margin, they're thinking of users, recurring revenues, and do they just become a battery supplier to the world's auto companies? This also begins when Jonas starts a line of thought that Tesla should be a battery supplier, and he mentioned this idea many times from here on out. He of course was wrong, and batteries have been a bottleneck for many automotive companies, including Tesla, especially considering the difficulty in ramping 4680 battery cells. During the same interview, Adam spoke to autonomy and the importance and difficulty in it. He mentions that he and Morgan Stanley had been pondering the idea for many years, so it won't be too surprising to say that Adam will eventually start stressing how Tesla's work in AI, autonomy, and full self-driving should be considered when calculating its valuation.
You've been writing so much and so extensively about autonomous vehicles and basically the future of mobility. What does this landscape look like? How does Tesla fit in against some of these other names, including Alphabet, which reported yesterday?
Sure. So autonomous cars, we've been writing about that for about 7 years with our colleagues at Morgan Stanley across about 10 sectors. Morgan, autonomous cars, the technology is real. It's a noble cause. There are hundreds of companies, if not more, allocating many tens of billions of capital to solving this problem of autonomy.
From the low in March 2020 to June 12, 2020, Tesla shares had gained a massive 120%, and Adam Jonas came out with a note downgrading the stock, citing issues with shutdowns in factories and price cuts across the spectrum of vehicles and regions. But he also backtracked his statement from earlier in the year about Tesla being analyzed as a tech company. In his note, he went on to say the company's high valuation is coming from tech-oriented investors who see Tesla's valuation as reasonable. And in the frame of discussion amongst large cap tech names like Amazon, Google, or Apple. And he added, it still faces a multitude of risks associated with running a car company that the market seems to be ignoring. It would be hard to fault him and all the other analysts who didn't believe in the price of the stock reflecting the fundamentals of the company, especially in the environment they are in. The market just recovered from one of the sharpest declines in history, but there was tons of money being printed and pumped directly into the pockets of everyone in America. The liquidity, sure, it helps with the market, but Tesla was just getting started. When this call was made, Tesla shares increased by almost 100% before Adam came back with a more optimistic perspective. It's August 18th, 2020, and Tesla's stock can't seem to stop going up. Jonas came out with a price target increase of $1,050 to $1,360 a share. He's still focusing on batteries as a business and mentions that Battery Day could be a catalyst for more movement up. He again mentions that Tesla could be selling battery packs as a tier 1 supplier. But looking back on this comment, now I'm sure he would no longer agree with that assessment. Within 2 weeks, Tesla's share price would realize his target. But later in September, Battery Day would prove to be a sell the news type of event. So even though months ago he would talk about how Tesla would be seen as a tech company, he doesn't seem to really believe it fully just yet. But you're also getting the picture that when shares rise quickly, Adam would use it as an opportunity to downgrade to equal weight. So yes, for now, Tesla is just a car company to him. Would you consider this flip-floppy? One could argue at this point in time, there isn't much to show for the tech side of things if you consider tech, the full self-driving, and other driver assistant features. Knowing what you know now in 2023, and that we still don't have a full release version of the software, could you say his thoughts were far off base? We see the beta work amazingly well though, along with that version that Elon showcased with the neural nets. The latter, I believe, really influencing Jonas to release the note the way he did earlier this week, and I think Walter Isaacson's AI story on CNBC nudged him to release his note sooner as well. So as Tesla fans, should we start losing hope in our friend Adam Jonas? Don't give up just yet, because later that year in October, Jonas begins a shift in the way he sees Tesla and internalizes all the things he mentioned over the years. Following the record quarter report that month, he came out with a note and a price target increase for Tesla shares to $720. Highlighting Tesla's outperformance compared to legacy automotive, Jonas goes on to say that Tesla is proving that they are making EVs at a profit, unlike every other competitor. This is after 5 quarters of profitability in a row and higher margins on their cars as well. He also noted that full self-driving and software will soon be a windfall in revenue due to, quote, a moment of truth for software revenue with the rollout of FSD beta. I think this is the beginning of Adam's bullishness in the stock, and you'll see his conviction in the following month. It's November 2020, and for the first time in 3 years, Tesla has now been upgraded to overweight by Adam Jonas and Morgan Stanley. Along with that, an increase in price target of $540 a share. Adam states that a profound shift is beginning in the business model of Tesla, from just selling cars to generating high-margin software and services revenue. He continues to say, to only value Tesla on car sales alone ignores the multiple businesses embedded within the company. With this change in thought process was a change in calculation process as well. Morgan Stanley's analysts include software as a service in their valuation forecasting calculations now. Yes, I do believe he has implied people should have considered the software side of things in their valuations some time ago. But the timing of this note just happens to be the beginning of a large move in the stock. It didn't jump on the great earnings report in October. It actually fell a little bit back then. From the moment Adam upgraded Tesla's stock to the January of the following year, Tesla shares would double in value. 2 months to increase over 100%. Adam has always been a respected automotive sector analyst, and especially a Tesla one. But now he will be associated with huge upswings when the street gets wind of his bullishness. We'll fast forward again. Almost 1 year ahead to October 25th, 2021. This would be one of the most famous and important notes for Tesla from the team at Morgan Stanley. Tesla shares were down for the year, meaning that since the strong run-up in January 2021, Tesla had yet to make a new high. Granted, since the lows of that year to when the note was released, shares had rallied 65% over the span of 5 to 6 months. Regardless, Tesla still had some wind left in it. Adam Jonas raised the price target of Tesla by 33%, from $900 to $1,200, stating the 2 reasons for the increase being extraordinary top-line growth despite industry-wide supply shortages and Tesla's industry-leading profitability. Jonas also reiterated his overweight rating for the stock. This growth was enabled by Tesla's vertical integration, supply chain management, and the ability to move fast. The rest of the sector, and really the entire world, couldn't get their hands on enough chips. Tesla was able to reduce their chip count and still get cars out of the factory doors. This note would be among a few catalysts that would drive Tesla shares to their all-time high, a price we have yet to see again. I believe that these last two reports I highlighted cemented Adam's legacy as a Tesla bull, as the media puts it. Reviewing many of his reports and notes, I've come to the conclusion that maybe he was a bit too conservative in the beginning and middle stages of Tesla's history. But he eventually came around to view the stock like how we would. And that was pivotal to the rapid ascent of Tesla's share price. Being part of a large institution and following the stock for decades separates him from other analysts, maybe ones from smaller firms. The credibility of the name he represents made a lot of investors rich beyond their imagination. So if you don't fully agree with him, I believe you owe him a little thanks for the heights that Tesla shares have seen. We retail investors like to tout the high percentage of the company being owned by ordinary people like you and me, but for the price of shares to rise, institutional players need to get on board. After this refresher course on Adam Jonas and his calls, what do you think of him as an analyst? Do you agree with Cramer and the crew at CNBC? Maybe we should hear a little more from them to help you make that decision. In this next clip, you'll hear some claims of something similar to corruption, amongst other things. Let's listen in.
Like this call at all. I like the hostess Twinkie call more, frankly.
I hear you. And listen, it's a fair point Jim makes, certainly, that the guy had a $250 price target. So obviously below the current stock price and suddenly has reversed.
He's been equal weight for a very long time. And there is a large disclaimer in the note that Morgan Stanley does and seeks to do business with companies related to Tesla. It may alter or imply a conflict of interest in Morgan Stanley.
Well, I'll tell you one thing
that was true about that note is he's not corrupt, okay? He's not corrupt.
I'll tell you one thing Morgan Stanley would love to do is get out of that $13 billion. It didn't take it all down. That it financed the Twitter deal. Any bids? Jim, what do you want to bid on that? Because they'll listen.
Carl on the left looks quite smug in his freeze frame. If you peruse his extra Twitter feed, you might jump to the conclusion that he has a bone to pick with anything involving Elon Musk. But back to the subject at hand. Let's go over the first claim. David Faber, the host on the right of the screen, says Adam Jonas was originally targeting Tesla's share price at $250, which was under the stock's current price, basically implying that he was just moving the price target to be above what the stock's price was on Friday. If he was just chasing the price, he didn't need to go to $400. I think the dollar amount is the statement of his conviction. It's all about full self-driving and the opportunity for the stock to return a vast amount to its shareholders, because achieving autonomy and doing it before any other company, it would lap them all. They would already be handicapped with their lack of prowess in the AI field without engineers for it, the lack of computing power, and in specific regards to the inability for companies to secure AI GPUs from NVIDIA, and of course a lack of data to power the AI. In Tesla terms, that data is millions upon millions of video clips obtained from the cameras from millions of cars driving on the streets of America right now. Those clips are curated by a team in New York which finds videos of drivers navigating through tough situations or just really quality driving that the AI should use as training material. The supercomputers are made up of Dojo silicon chips which are designed by Tesla specifically, which allows them to partially bypass the bottleneck in advanced AI chips. These Dojo chips are augmented by thousands of NVIDIA chips as well though. So with other auto manufacturers not having cameras built into their cars to obtain data, and no vehicle onboard computers for inference to process the incoming video streams, they're already on their back foot without even considering everything involving AI. So if a person like Mr. Faber has issue with the price target, it is likely because he doesn't believe in Tesla's effort in full self-driving. Self-admittedly, Elon Musk has overpromised on the delivery date of FSD many times, but it's hard to deny that FSD is a remarkable technology. All you have to do is take a ride in a Tesla with it enabled and experience a couple rides for yourself. No one says it's perfect, but to think there's a better path to self-driving and then autonomy? You're kidding yourself. It's like saying humans can't drive because we rely on our eyesight. Camera-based driving is vision-based driving, and vision-based driving is what we do every day. David Faber was personally invited by Elon Musk to Giga Texas to see for himself what Tesla is able to do. He was granted a rare opportunity to interview Musk, garnering millions of views in a highly publicized segment for CNBC after Shareholder Day earlier this year. To show his gratitude, it's best to insinuate that corruption abounds in the Tesla analyst community, right?
Suddenly has reversed.
He's been equal weight for a very long time. And there is a large disclaimer in the note that Morgan Stanley does and seeks to do business with companies related to Tesla. It may alter or imply.
I wanted to play Carl's portion again to really press home his insinuation. But firstly, let's address him saying that Adam Jonas has been equal weight for, quote, a long time. How do you define a long time? We spoke earlier about Adam Jonas flipping overweight back in 2021 after 3 years of being under or equal weight. So in Adam's context, maybe a long time is 3 years. Can you guess how long he's been equal weight Tesla before Monday, September 11th? Any guesses? It's not over 3 years. It's not over 2 years. Nor 1 year. It's been less than 2 months since Morgan Stanley and Adam Jonas took Tesla down from overweight to equal weight, but increasing their price target from $200 to $250. The way Carl talks about it in the clip makes it seem like it's been forever. Carl goes on to say that it's quite interesting that Morgan Stanley mentions that they may be doing business with a company referenced in the report, and a conflict of interest may be implied. So what are you saying, Carl, that Morgan Stanley tasked Adam Jonas to try to pump Tesla stock? For what reason? What is there to gain? Yes, Morgan Stanley is known to work with Tesla, Elon, and Elon's companies. It's not like they need their stock pumped to stay in business, though. Tesla's not going bankrupt tomorrow. Is Morgan Stanley trying to pump Tesla's stock so Elon Musk can pay back the money Morgan Stanley loaned to Twitter? Elon's not personally responsible for that loan. That debt is carried by Twitter, the company itself. Now, let's re-listen to David Faber's commentary.
Tell you one thing Morgan Stanley would love to do is get out of that $13 billion. It didn't take it all down. That it financed the Twitter deal. Any bids, Jim? What do you want to bid on that? Because they'll listen.
I don't know.
So professional anchor David Faber starts mocking Morgan Stanley's investment in the Twitter purchase, implying they wished to get out of that debt, but couldn't. That's actually true. No one was interested in purchasing the debt away from many of the banks financing the Twitter loan. But to say that Jonas's upgrade of Tesla's stock could do anything to help their deal, that seems nonsensical. Oh, and yes, if you didn't know, there are 6 other banks part of the Twitter loan. So everyone listening, for your future reference, if Bank of America, Barclays, Mitsubishi Financial, BNP Paribas, Mizuho, Societe Generale change their rating on Tesla, be sure to contact CNBC so they can run a segment bashing the bank for conspiring to get out of their Twitter deal as whole as possible. I know that Mizuho went with a price target increase last July. Maybe they're desperate too. Barclays reiterated their hold in the same month, so I think we can safely assume they're financially sound. Though we like to pick on Jim Cramer a lot, I think he starts coming to his senses for a brief moment. As both of his co-hosts start their offensive tangents about Elon, Jonas, Twitter, and Morgan Stanley, Cramer starts to understand what the audience might be picking up from their snarky comments. Corruption. So he goes out of his way to try to walk back his co-host comments. They are essentially just strong implications that a large US bank and an analyst that all 3 of them know personally, that literally has been on their TV segments on CNBC. Both the bank and the analyst are conspiring with Tesla and Elon Musk to pump Tesla stock. He literally says the only thing true about the report is that he isn't corrupt. Well, no report's going to say, heads up, I'm not corrupt, but I think we all understand what he's getting at. But his co-hosts, they forgot this was live television and not a bar. I'll play the clip to refresh your memory.
Well, I'll tell you
the
one
only
thing
thing
they
that
love
was
to
true
do.
about that note is he's not corrupt. Okay, he's not corrupt.
Well, I'll tell you
the
one
only
thing
thing
they
that
love
was
to
true
do.
about that note is he's not corrupt. Okay, he's not.
That was awkward. But Jim Cramer wasn't done. He still had his Mad Money segments to do later that night. Let's watch that clip next. But be sure to take notice of how he mentions that he actually likes Adam Jonas, while he expresses his dismay at the upgrade because it offends his NVIDIA-loving sensibility.
The story about AI that really has me steamed or stunned, whatever, is the one from Morgan Stanley's Adam Jonas, who upgraded Tesla from hold to buy because he says Tesla could be a tech company, and if it can tap its own super brain dojo, yes, dojo, that's it, right? Then it could be like Amazon Web Services, and therefore the company could be worth $500 billion more than its current valuation because of dojo. Look, I like Adam Jonas, but he missed the entire run in Tesla that came from being a car company. Maybe he's just getting ahead of the next leg higher as a supercomputer company, one that could possibly challenge NVIDIA down the road. That's why Tesla's stock went up 10% today while NVIDIA stock went down. I'm not convinced of it. Any company that needs to sort and process gigantic amounts of data will need artificial intelligence to stay ahead of its competitors. Any company that has a ton of expensive smart coders will find that they aren't as smart as a tower of NVIDIA's cards linked together. But I got to find this out with my own. I got to see it, okay? I've come right here to see it.
Jim Cramer is very emotional about a simple upgrade to a stock. Upgrades, downgrades, they happen dozens of times a day. But Jim Cramer is singling this one out after already harping about it in the morning. He believes a few certain companies are the only real AI plays. From a business-to-business perspective, he loves Salesforce. From a chips perspective, it's of course NVIDIA. And consumer-facing, that would be his beloved Meta. He once claimed Meta was his AI company. That's his pick.
Yeah, well,
AI. That's my AI.
We'll always have that
My
video
AI
of
is Alan
the two
Iverson.
of you and Zuckerberg missing your.
So, is it possible Jim is worked up about the stock so much because he feels threatened by the likes of Tesla being compared to his NVIDIA? I don't hear Elon saying he's producing these chips and selling them to other companies and becoming a new fabless semiconductor player. Dojo has been optimized to be amazing at efficiently processing video clips for full self-driving. Sure, I'm certain other companies could benefit from those chips one day, but why would Tesla be interested in enabling others to advance their AI ambitions, especially in the real-world AI space? Not that Elon fears competition, but everyone's already saying it. Companies are going to be compute limited for the near future, before they start becoming energy limited due to the amount of electricity AI training data centers draw from the grid. Another angle we can explore is maybe the purchase of Twitter starting a change in how the media perceives Elon. I want to play a clip for you at the end of this video that was recorded before Elon made that takeover offer. It will contrast dramatically when compared to the clips you watched earlier. In the clip, Carl and Jim seem considerably more positive when it came to Tesla and Elon. You'll even see Jim defend Elon. He'll even go as far as praising his contemptuous personality. Carl, who surely hates Elon now, gushes with thanks for Elon providing Starlink service to Ukraine. But ever since Elon purchased Twitter, the sentiment has completely shifted. Everything that he does that is controversial is amplified. And it's not just CNBC, it's most of mainstream media. Nothing that he does that is good is ever talked about. Trying to better your business by building more data centers and supercomputers? That's reason for ridicule. If an analyst thinks that Tesla's a great investment, well, obviously he's insane. Adam Jonas didn't do anything wrong other than appreciate the future prospects of Tesla, and for that he was crucified on television by people who used to turn to him for content, interviews, and analysis. Thank you all for listening, and hopefully this provides some clarity on Jim Cramer versus Adam Jonas.
Okay, so today's a very big day. We got the ribbon cutting in Berlin for the Gigafactory for Tesla. I think Tesla stock's about to have a big run, and Tesla stock can be a major leader here. And one of the reasons I think is that, an often oft-guessed Dan Ives is saying, in a nutshell, we believe by the end of 2022, Tesla will now have the capacity run rate for overall 2 million units. And they also seem to have the supply chain problems figured out a lot better than everybody else. And then they talk about de-risking China, that China is no longer as important, which is obviously major because China's so convoluted. But I just think this is right in the wheelhouse of the country that is known as the capital. Now, I used to be Detroit, and I still love Detroit, but you're going up against BMW and Benz. And, Musk just laughs at everyone. He's contemptuous of everyone other than Musk. I like that.
It is amazing that even though Giga Berlin's been in the works for so long, its debut is coinciding with the time where the EU is like, we got to get off oil.
Yes.
Period.
And by the way, everything seemed to me to be a hoax that was against him. The forests, the Schwarzwald. I mean, come on. Give me a break. I mean, there were just interests in Germany that didn't want this, but you're right. I mean, by the way, I was talking to someone the other day about Germany recommissioning nuclear. You just can't.
Right. Now it's Japan that's sort of in the same boat. So reliant on nuclear, and you saw what happened to the yen versus the dollar.
I know.
Worst since 2016.
Worst, I know. So I'm very, look, I think we should feel proud that Tesla has gone right to the Capitol and said, you know what, Bavarian Motor Works, take this. People want Teslas. They're not buying your electric cars.
Right.
And that's a very, very good call.
And as far as Musk goes, he's got that going on, and also Starlink and the benefits that's giving to Ukraine and their ability to stay connected is pretty amazing.
I think Musk. I mean, I would give him the ball. If I were the president, I would say, all right, what do we do? What do we do weapon-wise? We're sending we're sending these weapons over from like Desert Storm. I mean, just tell us what to do. What would you do, Elon? But I don't know how, the president seems so uncomfortable with business people.
Yeah.
And the only person, Gina Raimondo,